Hello, this is Bruce Wan, Head of Research for MaxCap Group. Now in this video, I wanted to add some global colour to the outlook, comparing the Australian and overseas credit markets. In other words, where should investors deploy their global credit allocation? Where does the credit compass point towards? Of course, there are many ways we can draw out the market differences. For me, the most useful things are demographic trends, potential growth, credit risk and returns, and market structure. When we think about the demographic and growth outlooks, we do see a clearly divergent trend across different countries for cross-border migration and population growth. Around the world, more and more countries are seeing population declines. In fact, we have seen peak population already in Japan, Italy, South Korea, and China, with Germany set to follow in 2024. Meanwhile, Australia continues to stand out amongst developed markets with a consistent pattern of inbound migration holding up both economic growth and housing demand. Indeed, this is one of the key factors sustaining housing values, despite the sharp increase we've seen in mortgage interest rates since 2022. At the same time, real estate credit markets in Australia have performed very well compared to other credit markets around the world. Indeed, we have seen firm and consistent historical returns in Australian real estate credit, in sharp contrast to the negative credit returns we've seen in America, Europe, and Asia in recent years. Importantly, Australian real estate credit has outperformed the super fund benchmarks for Australian bonds and Australian credit by a wide margin, with similar low degrees of volatility. Certainly, historical returns are no guarantee of future returns. However, the real estate credit outlook ahead is being very well supported by sustained demand growth and high interest rates. Looking at this chart, we do see the historical distribution for real estate price movements for the residential market, for Australia, and a number of other major markets. Over the last 40 years, we can clearly see the Australian market being much more resilient in terms of price movements. Australia simply doesn't have the big drawdowns and the big downturns we've seen in markets overseas. Overall, the Australian market is very resilient structurally, with full recourse loans where borrowers cannot just hand back the keys and walk away, as we're seeing right now with the distressed conditions in the US market. So what are the main takeaways here? For investors looking for a destination for their global or APAC private credit allocation, Australia should be high on the priority list, given its sustained growth, strong demographics, robust returns, low volatility, and favourable defensive market structure. If you're after more information on this story or its market implications, come talk to us and our capital team, who can give you much more colour about the potential opportunities. This has been Bruce Wan for MaxCap Group.